Everybody, it's Thursday evening. You know what that means. It is time for the Financial Thing Thursday evening live stream where we talk about all things investing. Tonight we are, of course, doing peer-to-peer lending focused, and I think we have a special guest. I don't know. We've a couple of times we've missed each other, and tonight I was hoping that he was going to be here, and I think he's here. I think we have Narinder from the CEO of Cufflink. I'm going to put his face up on the screen so he can say hi. Hopefully, we're just going to test the sound and see if everybody can hear him, but should be fine. There he is. How's it going, Narinder?
Hi, Lawrence. Hi. Yeah, very good. Thanks. How you doing?
I'm very wonderful, very wonderful. Thank you very much for joining us. Everybody has been really super excited about you being here, and it's been a bit of a long time coming, so we're going to have a good chat about Cufflink. We've got about 41 people here right now, which is climbing steadily. Everybody give us your thumbs up for the two people wearing the glasses who are giving you tons of value for this hour. Our usuals are here.
I do apologize for last year for not turning up last year. Apologies.
That's okay. That's okay. You're totally fine. It happens. And the point is that you're here now. And Narinder and I have always had a good relationship. We've known each other for a while. I've been over to the offices of Cufflink a few times. And I wanted to get him on here so he could tell you what's going on with Cufflink. We're going to have a chat about peer-to-peer lending. If you have any questions or comments, put them in the comments and I'll read them to Narinder, put them up on screen. I know some of you are investors with Cufflink currently, and some of you may be interested in possibly investing and looking at them. So just a quick disclaimer, I am an investor through Cufflink. I do buy some of their loans, and been very happy so far. So let's get right to it. So Narinder, let's talk about Cufflink. Tell everybody how this business started and when it started. What's the deal?
So, the founders of the business are very big in property development and have been for 20 to 30 years. They were big borrowers from the high street banks, and the business kind of formed itself from the last crash in 2008, 2009, where the guys wanted to borrow money from the banks. It all dried up, and they had some pennies lying around and started to lend their own money. So the business started off back in 2011 doing short-term bridging loans, and we've grown that rapidly. I mean, I joined the business, but I knew of the family back in 2011. I joined the business back in 2013, when the guys were really looking to grow the business and really to do some of the bigger ticket stuff. And when I mean bigger ticket, I mean, I'm not talking about millions of pounds. I'm talking about when they first started off, we were talking about loans of 50, 60, 70,000 pounds. And, when they brought me on board in 2013, they really wanted to do, the 150, 200, 300,000 pound deals. That's what they were really looking to do. And, and they all wanted to be property backed, short-term bridging loans. And my background was, I've been in the alternative lending space. Prior to joining here, I was doing high-end pawnbroking with Borrow in the city, and prior to that, I've worked in the insurance markets and in the consumer lending and business lending markets myself as well. So I've been very I've got a good contact of broker contacts that I have. So that's the reason why the guys brought me in to really build up that sales channel within the business, and that was back in 2013.
So you've been going for almost 8 years now. And I think this is a really important thing that we need to cover about the experience of the people behind the companies, because we have a lot of these startups now where they have a lot of tech experience. Some of them are not as experienced in finance and lending. So talk to me about a couple of the other people, executives at Cufflink that you work with, and what their experience and background is. Just a short little summary
just before I go on, I mean, it's always good to have a good mix of people within a business. I mean, you shouldn't have too many people with just pure property experience and too many people with just tech experience. You got to have the right balance, and I think we have that right balance here. So, like I said, from the owners down, they've all had a lot of property experience. I've got experience in the alternative lending market, We've got Natalie, who sits on the credit committee, and she's also works in the collections team as well. So she's got, I think, 30 odd years of experience with Royal Bank of Scotland. We've got Pete Wilkins in the team now as well. So he's got a lot of knowledge when it comes to property development himself. So he's got a number of property developments that he's personally been involved with himself as well. And then we've got a few other guys that sit on the other credit committees. John, he's a RICS surveyor. So we've got a very good mix of people. So when we're looking to bring any deals onto the platform, they are thoroughly vetted through separate credit committees. So we'll have a separate committee which sits on the origination arm of the business, which we call Cufflink Bridging, and then you've got a separate committee which I sit on, which is the peer-to-peer arm of the business, which will double vet those deals before they go onto our platform.
And one of the things that you and I had spoken briefly before we got on here, and I really like this, but you said due to COVID, you've kind of decided to slim down the operations of the business for obvious reasons of what's going on. Tell me a little bit about what you did to cope with maybe your staff level was too big for what you thought was going to happen with COVID. What changes did you make to the business?
There's a few changes we made to the business. One thing we didn't change was anybody that sits in the underwriting credit committees. We just cannot afford to lose those kind of people within our business. They're the backbone of the business who vet all these deals. So we parted company with a number of staff that were in roles which were in the marketing team. So content writing, designers, graphic designers, etc. So it just made commercial sense for us as a business that we streamline that side of the business and then try to outsource those to consultants that are more what's the word I'm looking for? Probably more competitively priced in the marketplace. So those are the areas that we focused on, and those are the areas where over the number of years which we've spent a lot of money on and resource on in terms of expenditure within the business, which has come to fruition now. So it allows the business to use consultants because we've got all the systems and technologies all built in-house because everything's done bespoke in-house as well. So we don't outsource any of those platforms or servicing or loan management systems. It's all built bespokely for us.
So, and for anybody that doesn't know, Cufflink is actually based in Gravesend, which is Middlesex, right? Is that right? Did I get that right?
Kent.
Damn it. I'm not very good with my boroughs. I've been on the train out to see you so many times. And you used to have a very open door policy too with investors saying, hey, if you want to come in and meet us, come say hi. Has that changed because of COVID? Well, obviously now everybody's in lockdown, but is that something that people will still be able to do in the future? They can just come by. And you used to have ice cream too. You still got the ice cream in the fridge?
Yeah, well, we've got the fridge, but there's no ice cream in the fridge anymore, unfortunately, because there's no one there in the office. We have skeleton staff there. So, I mean, I'll go into the office every so often. So we'll have about 3 or 4 of us that are still operating from the office, and everybody else in the team is working remotely from home. But yeah, the whole reason for us to set up that operation was because we wanted to do something different to what our competitors are doing. It's almost like, if you wanted to go talk to your bank, you go in to see your bank manager or the staff in the bank. So we wanted it to be that type of a feel, and I think it's benefited. It has benefited the business because we've had certain people who are not very tech savvy who want to be able to put a face to a name, who want to come in and physically talk to somebody before they make any investments, and it has worked for us.
Okay.
But the plan is to still have that when we come out of lockdown and whenever that may be. But the plan is still to have that operation there.
Yeah, when we're all vaccinated and growing a second head, then we'll be able to come to your office and hopefully get some ice cream. That's good. So just really quick, the rates of Cufflink have always been sort of pretty standard, 7, a little bit over 7% sometimes. Any thoughts about what's going to happen with rates going forward over the next year, 2021? You're going to continue to offer those types of rates? And what are investors looking at getting on returns if they were to invest through you?
So I think some investors may disagree with me here, but I think 7% is still a good margin to be earning in this space. I think the business, and there is no plans to drop the rates at this moment in time or increase the rates. We've never ever really come to those. I know there's other platforms that offer double-digit returns, but we've always been one of those platforms that have said we're never going to go down that road, because it's just we just cannot physically see how we're going to achieve those types of rates to offer those out to our borrowers. And because we've come and originated as a bridging lender and a development lender for a number of years, to achieve those double digits is very hard to get those digits, even as a lender yourself. So for us to offer that out to investors, it's just not feasible as a business.
Yeah, we've seen that with some of the companies that have failed, that were offering those double-digit returns that look so beautiful, so sparkly. When they were advertised all over the website, we could get 12%, and ultimately those businesses failed, which is what we don't want to happen again, because one failure is terrible for the industry. We have a question here, and that I think is pretty interesting too. We have a guy named Dave Dawson. He's our dividend investor. I call him Dividend Dave because he's really into dividend stocks. But yeah, he says, how does Narinder feel the market is heading? So I would imagine he'd be talking about generally peer-to-peer and not necessarily anything else. What do you think is going to happen to the peer-to-peer lending market? We saw this FCA too. I don't know if you spotted that, but the FCA has put peer-to-peer in the high-risk category again. Yeah. So what do you think is going to happen with the market this year in general?
I think there's going to be a few more casualties in this industry, because I mean, there's always been names being floating around. I'm not here, to comment on any other businesses there, but I think there's been a certain number of platforms that are being offering, unrealistic returns, and it will come down to how experienced their vetting process is with these loans, and how good their teams are in recovering certain loans, and those businesses I think will probably fizzle out eventually. And I think there'll be a smaller number of peer-to-peer platforms, and I think we're headed definitely in that direction ourselves because of our team. And I've seen the types of deals that are coming through, and I see the types of deals that we are writing. And to date, we still not had any investor lessons on our platform, which is great. But I do think the industry will become smaller. I think there will be 10, 15 major players still left in the industry, of which 5 or 6 are very well established and very well known. I think it'll be a very small market. But whereas over the few years there was 50, 60 platforms around, offering various types of returns, different types of asset-backed and non-asset-backed investments. So I think that the market will definitely shrink, which gives opportunities for people like our business and our competitors as well. And from an investor's point of view, they have to do less due diligence on say 10, 15 platforms than they could just focus on 4 or 5 to diversify their funds.
Right. Okay. One of the big, I think, draws to Cufflink is that you guys actually put your own money into the loans. So you got skin in the game. That was what we call that in the industry of finance. I think that's a huge plus. And what I was curious is, how do you calculate how much of Cufflink's money actually goes in? And does that happen on every single loan, or is that selectively?
No, so we put 5%. I think we may have done on 1 or 2 loans previously where there was smaller amounts we put in. But I would say 95% of our loans, we have a 5% stake. And we had originally, when we came into the market, we wanted to be different. So otherwise, us coming into this marketplace just didn't make any sense. We had to be something different, something quirky about us. Yes, we had the experience of lending against property and short-term bridging loans, but we said as a business that we have a chunk of our own money, which is not institutional money. It's friends and family money that we have in the business that we wanted to physically put into every single deal, which gives extra comfort to our investors and shows them that we've got skin in the game, and that's how confident we are that we're going to be first in every deal, and should the worst case scenario happen, we're the last one out of every deal. So I've had a number of conversations with investors over the years, and they really see that as a plus point, which is great. And that's going to continue within the business. We have no plans of taking that away.
Okay, that's excellent. I like that. Very, very good part. I think I wish more peer-to-peer companies were doing that, putting their money where their mouth is. We'll see if that happens in the future. And there was always a bit of a muddy thing about the FCA and whether that was okay with them. But I'm really glad to see that you are continuing to do that even as you grow as a platform, because you've recently had a big deal, 100 million lent. That happened in January, right? This month?
No, sorry.
Was it December?
But it was actually December. It was just, I think it was a week, the week during that Christmas, New Year's week, which was fantastic. And thank you to the investors that have supported us along this journey. And long may it continue. And like I've said to you previously, the number of inquiries coming through the door, it doesn't seem to be slowing down. They're getting bigger and bigger. The number of inquiries, that is. And we have the appetite to lend, and there's going to be a regular flow of deals for investors to put their money towards.
Yeah, absolutely, and that's a big thing. Deal flow. We've got a couple of your competitors that have been difficult to get money, especially if you're a larger money investor. It's been difficult to invest in those because they're just not offering as many, and two, they get snapped up so fast. But I think last week I saw you guys had 4 or 6 new loans on the platform, which is cool. I don't always invest in all of them. As you know, we'll talk about the second charge things. That was one of the things on the review which I said, I'm not a fan. I hate, how I feel, Narinder, about second charge loans. But what you pointed out to me is, talk to me a little bit about the feelings on second charge loans. And because, my gripe has always been that the interest has never really matched what I think is the risk involved with taking on second charges. But what's your thoughts on those second charge loans and why you do them?
Okay, so I can't remember the last time we've done a second charge loan now. So I think that's been some time ago. And look, we for us, every deal we look at is always, we look at the borrower. We look at the borrower, who they are, what they intend to do with the funds they're looking to use or borrow against from us, and what is the asset. So if we can't see an exit out, as in, where the exit plan is to either refinance, or if they're going to be selling that asset that we're taking a charge on, then we have no desire to do that deal. We always want to look at the exit. That's the key thing for me when I'm looking at when I'm sitting on the credit committee. I'm always looking at the exit. It's all well painting this lovely picture right now when they're bringing the deal across to us, but if we can't physically see an exit out, then we're not going to do that deal. So there's a lot of things that we look at behind the scenes, and whether it's a first charge or a second charge, the LTV could be relatively low, and the key thing here is if you're taking a second charge and it's an owner occupied property, that is very, very rare that we do those. It's happened, but those will be, for us as a business, that's something that we look as an additional property. It won't be the main property that we're taking a charge on, or unless the LTV is very, very low. And if the LTV is very, very low, the client's credit history is very clear, then we know that there's a plan there in place for them to utilize those funds, and they can successfully refinance that debt out and away to a high street bank, which is a lot more cheaper for that borrower. I mean, if we can't see that, there's no desire for us to do those types of loans. And then that goes on to interest rates. So the challenge we have is, I know if we've done a few of these second charge loans previously, we should be probably offering a lot more to our investors. But I think what we wanted to do as a business is we saw the borrowers package, so to speak, when they wanted to borrow money. It just made commercial sense to do the deal, but we don't actually have an appetite to do those deals. We want to do the first charge loans. We want to do short-term bridging, refurb, development types deals. Those are what we really want to focus on, and that's why I can't remember the last time we've done a second charge deal. So I feel your pain on those. It's not something that we actively look to go out there and do, because we're more known to do the short-term bridging loans and development finance.
Okay, good answer, Narinder. I like that. So the cool thing about you being able to be here tonight too is you're gonna get some feedback from people that are watching. We have 69 people right now watching you live, so don't get nervous. If everybody could drop me a thumbs up, we got about 32 thumbs up now. That helps with the YouTube search. It being live right now, more people get to get this really important information from Narinder. So I'm going to just read a couple of the comments that our esteemed guests who are here every week, very loyal people we have on the stream here, Narinder. So Dave Dawson says it would be good to be able to split secondary offers on the market to get people to invest via multiple bids, say two pieces of a £500, two pieces of a 500 each on £1,000 secondary market. And this is something that I think I've talked to you about before. You know how you got to buy it in one chunk, no matter how big.
Yeah.
Have you got any plans to adjust that at all?
Yeah, so we have been looking at ways on potentially how to do this. The challenge we have here is there's so many other things that we're looking at as part of a business. This will be another one of those things that we are looking at. That I don't see this happening within the business for a number of months. It won't be anytime soon because there's a number of other projects that the team is working on, and for us to make a certain change to a platform, I mean, for all the tech people out there, they know it's just not something that you could do overnight. It's, any changes that you make, is changing code. Certain fixes then need to be made on other areas of the business. So yes, to answer that question, yes, there's something that we're looking at, and I think it will happen at some point. I just can't answer that now as in when, but yes, we are definitely looking at
that. Yeah. No, as a website guy myself, I know how hard it is just to change a color on a stupid page. So people are like, yeah, we just do this and that. Like, do you know how much time that takes? It's quite difficult, but it is something that's on the radar. I think that's good. Dave also says, can we speed the return of cash up? It's taking 5 days to, I don't know if that's deposit or a withdrawal, what Dave's talking about. Is that,
I've got a feeling that, I think that might be withdrawal. So I know we've had a few challenges over the last month or so with withdrawals. I think we are processing them a lot quicker. There's a few fixes that we had to put in-house ourselves, which I think they're bearing fruit right now. So yeah, that's something that I don't really want to be getting feedback from. So if you want to be withdrawing your money from your wallet, you should be getting it back within your 5 days. I mean, we say on our T's and C's that you should get it within 5 working days, but I think on average we are averaging probably around 2 to 3 working days, there or thereabouts. But yeah, that's something that I constantly feed back into the team, and they are constantly working on that as well to make sure that doesn't happen.
Okay, and with a little bit of a negative one comes a positive here, so we can give you a little bit of a positive. Dave also says he likes to comment a lot. Dave says the great service from Cufflink, and he loves the tiered loans, so someone can take on the level of risk that they want. So there's a little bit of good feedback. We got Annabelle, who I think is in Spain. Annabelle Narinder says, been a Cufflink investor for over a year. Fairly impressed so far. Alan Toombs, very happy with Cufflink. Narinder, no dramas through this difficult period and good steady returns. So you got some happy campers. Another watcher. Love the way you handle problems. More than happy to leave my money in alone to give the borrowers a chance to sort something out. Let's talk about So you got some good feedback. Lots of people with positive things. Let's talk about. There's one loan that seems to be popping up in the comments here, and I don't know how much you can talk about it. Is it South Park? Is that right? Am I getting the name right? South Park Road?
I think it's Southwark Park Road.
Yes. So do you have any information about what's going on as far as that? Maybe is that a loan that's in trouble?
Well, so we're working with the borrower, and that I know there's some capital reduction that's being paid to bring that LTV down on that loan. But there's only so much I can really say on that loan, because obviously it's a bit of a sensitive area there with that loan and the borrower. But all I can say is that we are working very closely with the borrower, and we are looking to get some cash back in from that borrower. So there's a chance that loan may return, but if it does return, then there is going to be a capital reduction which will be shared back to our investors.
Okay. Obviously, being able to handle loans that run past you, sometimes they go into default. What has your experience like at Cufflink been recovering loans that have run into trouble? What's the process, and have you been fairly successful with the recoveries?
Yeah. I mean, if you look at our track record, no one's lost any penny to date. So I think that speaks for itself. And I think the process that we have within the business works for us. And I know the industry standard in terms of what they define as a defaulted loan is totally different to the way we look at things. So, industry average, they'll look at a loan going into 6 months. And I know probably there's some investors who may be listening who may be saying, well, we might have had one or two loans that have gone like that as well. But on average, if any loan is not paid back within that 30-day window of it expiring, we are very, hot on the case to go in, either recover that asset straight away, and gain vacant possession of that property, and then dispose of it at the next auction, which obviously over the last 12 months has been a challenge because we've been going through the whole the COVID period, etc. So for us to gain access to property and get vacant possession is going to be very difficult. And I think investors need to think from a borrower's point of view, and for us as a business, it's all about treating both sides of the business fairly, so the borrowers and the investors, because investors have put their hard-earned cash into to fund certain deals on the platform, and then borrowers have come up against a situation where other lenders are not around to refinance that debt away from certain lenders. So it's just a waiting game, and we're doing everything in our power that we can to either get a capital reduction back and share that back to our investors, or to reterm it and make sure that it still works in terms of our LTV and our product and our lending criteria as well. So that's going to be a challenging period, and I think that is going to happen more so over the next 6 to 8 months as well, where loans are expiring, and investors' money might be tied up for a little bit period of longer time. But I think in last year alone, I think we paid back about 15 to 20 million pounds back to our investors, in capital repayment. So there are some loans that are getting repaid back, but there are going to be some challenges that we're going to face going forward, where the borrower is not going to pay us back on time, and we have to work with the borrower, because it makes no commercial sense for us to just go in, get vacant possession, and try to sell it at the next auction, because if you do, there's a chance there might be a shortfall, and if we think there's going to be a shortfall, we don't want anybody to lose any money. That's the key thing here, so that everybody recovers from the loan, the investors and the borrower as well, and that is challenging, and I do get questioned that quite a lot from investors, and I feel that if I'm invested in a deal and it's supposed to be paid back in 6 months, I want my money back in 6 months. But it's not always the case, and it's clearly stated in our T's and C's that your money may be tied up for a little bit longer.
Yeah, and absolutely, I think now the key too is really people are just going to have to be a little bit more patient, and especially with what's going on with COVID, hopefully things will start to settle with that. But you got to remember, it's an investment. People out there, you are getting paid to take on some risk, and you're not going to have access to money like a bank savings account that you can get.
And also during this period, sorry, Lawrence, is that we do pay that interest during that period as well. So we're always regularly paying that interest, and it's always paid on time.
Yeah, absolutely. Oh, quick question. Somebody asked me, while your money is, if you pledge to a deal but it's not live yet, do they get paid interest on that money, or while it's pledged or not?
So we call it a reserve deal. So if you put your money on a reserve deal, the moment the deal goes live, so that interest period, so it could be for 5 days, it could be 10 days, or in some cases it could be a month. You get that paid as a cash back into your wallet the moment that deal goes live.
Okay, so that's a little bit of a bonus there. So we got a question here, and this is a little bit unrelated, but one of our readers, Andrew Wilson, has said, Wealthsimple invest engine type model tracker funds, handpick versus Cufflink property returns for a new peer-to-peer. And I'm a little bit confused by what that means, but Wealthsimple is, Andrew, something I've tested out for I think 3 or 4 years, and the returns were really behind what you would have gotten from just picking out your own investment, like one single tracker fund. So I'm not a huge fan of Wealthsimple, and I'm going to do a video on that soon. Personally, I think just picking out your own stuff is the way to go. Some of these robo investment companies they're not going to get you the best return. So next question for you, Narinder, from Chica Boy, who says, question, does Cufflink offer an ISA? If so, I might open that one with them in April. There's a couple of things about ISAs with the self-select, right? So you cannot use self-select. Am I getting that mixed up?
No,
Tell
that's
me the
correct.
rules.
So our ISA product is purely in our auto invest product. So you diversify your funds across a number of properties, and we've looked at bringing that potentially into the select invest side of our business. And for us, we've the number of people that have asked for that probably isn't enough for us to even think about going down that road, because the challenge you have there is you're in that wrapper period, so you've got a 12-month wrapper, and if there's a deal that's you're putting your money against, which may only be 6 months long, and then at maturity of 6 months, you may not have another 6 month deal, you may have another 3 month deal, you might have another 12-month deal. So it's we've just never got ourselves around that. So we've just decided to stick with the auto invest. It works. You fix your money in for a 1 year period, 3 year or a 5 year period, and that works for us as a business. And I'm not saying that we're never going to go down that road where we might offer certain loans on Select Invest, which comes with the benefit of the ISA wrapper. That may happen, but we've looked at it. It just doesn't work for us at this moment in time.
Yeah, because that is a question I get quite often, that people do want to be able to pick out their own. But also I would imagine some of your ISA customers are more just set and forget type people. Yep. So if you do want to sign up for an account, I'm going to put the link, the sign up, in the chat box here. Are you running any bonuses at the moment that you want to tell people about? I don't know what I think the bonus is up to 4K cash back or something.
Yeah, so that's a brand new investor that comes onto our platform. We pay 4% cash back up to a maximum of £100,000. So you'll have to go onto the T's and C's to have a look at those offers that we have, because I don't want to quote on one, because they may have been one that we may have put out and that I may not have mentioned. So if you go onto our platform, you have a look at the T's and C's, they'll tell you what offers we have. Yeah,
if you sign up through the link that I gave you on the chat, I think it's up to 4,000 cash back. Obviously that depends on how much you put in. The more you put in, you're going to get a higher bonus. But look at the terms and conditions. Let us talk about let me pull up my list here. I've got a bunch of other questions for you from people in the chat too. So 2020 has been a really rough year, I would say, for peer-to-peer. What with the COVID, and we had the fall of a couple of companies. One of the questions, Narinder, that I get most is, how can I trust, if I've been an investor in Funding Secure, and I know obviously you don't want to comment about those particular companies, but if I've been an investor in a failed company, how am I going to have enough confidence to put more money into a new company? How do I trust that Cufflink is going to do the right thing and that my money is in good hands?
So I think a lot of investors I speak to, I think a lot of them get caught up with these big returns, so I think if you're looking for a big return, of double digits, we just don't do that. So you got to look at what you actually realistically in this marketplace, especially in the peer-to-peer marketplace. I mean, on average, if you look at it, I think the players that are probably in the area which are asset backed are probably offering anything between 5 and say circa 8%. So it's we're all around that that mark. So I think the key things to look at is, look, who are the people behind the business, who's running them, what is their experience. You've got to do that due diligence. You need to know, if I'm giving my money to somebody, who is that person? What is their background? Do they have actually experience in this industry? And if they do, what kind of experience is it? What value do they bring? What are the team members look like? How long have they been doing it? So these are key things that I would be looking at. And and like I said earlier in this conversation, we've got a very experienced team here, and it's got to be diverse. And I know there's other platforms that have a lot of investment bankers who have set up the platforms, and that's great, and they come with a wealth of knowledge. But if you don't have that right mix, and that mix has to be property, finance, risk analysis, you need that good mix of people before you should actually go onto any platform and deploy any funds. And then you've also got to look at the asset class, and there's platforms out there that offer you SME type loans. If you're happy with those, that's fine with you. But we've always said as a business we want to stick with pure property backed assets, and commercial type assets that we know that we can physically see and put a valuation on. And and yes, I know those valuations can go up and down as well, but I think over the course of the last 12 months, and our loans haven't been prime London assets. We've been further out in the regions, where the market hasn't been hit as much. And I think there's been about 10-15% reduction on those valuations that we have seen. But we're vetting those assets thoroughly, and the borrowers as well.
Okay, great advice from Narinder there. Chimpo Naughty Darren says double-digit returns for peer-to-peer property just too good to be true. Couldn't agree more at this time. It's very difficult to get that. Because if a peer-to-peer company is offering you double digits, they've got to be charging the borrower a pretty substantial amount of interest. And John Day says, Narinder, will HMO developments continue to be a good investment in 2021? Now, I've had a bit of a bad experience with HMOs, to be honest with, and this goes back to my investing 5 years ago through a couple of the companies that are no longer doing what they're doing, but had HMOs. And they just had terrible problems keeping those places filled with tenants. A lot of times they were half vacant and couldn't get a good renter in there. So what's your feelings on HMOs? You think they're good investments or what?
So look, just from our platform alone, we would only lend to somebody if they've got experience in HMOs. If they're coming into this market to go into the HMO market, we're just not interested, because we want somebody with a bit of track record who have converted, properties into HMOs. And yes, they're good if you know what you're doing and the area's right and it makes sense. But I think we've seen a few applications that have come our way which make no commercial sense whatsoever. I think people are probably chancing it and they see an opportunity, and we're vetting the borrowers and the asset, and we're looking at it. If it makes sense, we'll do it. If it doesn't make sense, and like I said, I've seen a number of those types of inquiries come through. It just makes no commercial sense whatsoever.
Yeah.
And we'll happily decline those, because like I said, the most important thing for us is if anybody's entering into those loans as an investor with us, we want to make sure that we can exit out of that loan.
Yeah, and just for anybody that doesn't know what an HMO is, it's a property that can be tenanted by multiple people renting a bedroom out. So instead of one family taking a whole house, you could have a 6-bedroom house that's individually rented out to 6 different people by room. So can be very high income for the people that know how to manage them. But I think sometimes very problematic due to the types of people that tend to rent those places. Not all bad, not saying all HMO tenants are bad, renters are bad, they're not. But they can be just difficult to manage. So let's talk about Cufflink's profitability. One of the big problems peer-to-peer lending companies are having right now is they're operating in the red and have been for a number of years. We've especially seen some of the bigger companies like Funding Circle having some real problems about profitability. How is Cufflink doing in that area of business?
So look, when we first established as a business as 2013, we was very profitable as a pure bridge lender. This market you come into as a peer-to-peer lender, there's a lot of money you need to spend, and that's on infrastructure, that's on marketing, and the business is going to be able to soak that up, and then you've got to write enough business, and that's always going to be a challenge. And we went from a profitable business to be a loss-making business, but what we have seen is those losses have come down over the years. And I know this question is probably going to come up at some point, so I'll probably might as well move on to the accounts now as well. So, we're still yet to publish our 2019 accounts, which I believe are very imminent. I've spoke to the auditors last week on those as well, so they should be published shortly. And we're also working on our 2020 account. So what the accounts are showing is that we're coming down in terms of showing losses, and we're on that curveball going up. So I've seen about 4 or 5 months of this year which we've shown profitability already. So our 2021 counts, we're there or thereabouts to show some sort of profitability in those. So it's looking good. So we've, like I said, all that money that we spent in infrastructure and marketing costs, we've soaked up in the business, and it's bearing fruit now. But we've gone through that growth stage now on that, where we've had to spend that substantial amount of money. But over the course of the next 12-18 months, that will show that we'll be a profitable making business. I mean, and we're writing a lot more business now as well.
Okay, not a problem. So there you have the accounts question, and I think you told me that you'd been doing it through, is it Ernst Young?
Ernst & Young, yeah.
Ernst & Young, very big company.
the other challenge you've had, you've had COVID, and you've had a number of teams that were working on the accounts that were then seconded somewhere else, and then you're starting from scratch again with different teams. So it's been a bit of a challenging year in terms of people who they were coming in to audit us, and and the team that we had working on them as well. So it hasn't helped, but like I said, those accounts are imminent, and the 2021's account should be done very shortly after that as well.
Okay, great. Yeah, we got about 81 people live right now watching you, Narinder, and I think it's been super informative. We're going to go for a little bit longer, probably about an hour total. This is the big joke of the stream, Narinder. I always say every week, we're going to make it under an hour, and we never do. It never happens, but I always say every week we're always under an hour. So we got 51 thumbs up. If you could hit the thumbs up button, that helps us out a lot. John Morgan, again, I think we addressed this, but he's talking about that Southwark Park Road. Hopefully he heard what you said. It's a little bit difficult about what Narinder can publicly speak around. Sometimes those things are sensitive, but it is being addressed. And obviously with COVID going on, things are slower. Borrowers I think, are being a little bit more lenient, as I think people should be. I mean, people are in difficult times right now, so that is being addressed. Dave Ellard, he says, hi, could we have a bit more info on loans and borrower history, like what you do? Just a bit more info would give a bit more confidence. So I think probably what Dave is saying is what kind of background, maybe checks you're doing on borrowers' history of what they've maybe taken out, what their experiences like in doing like property developments and stuff. How do you vet them?
So we have a say, for example, let me go through a transaction, and an inquiry will come through. So all of our inquiries that come to us come from a broker. So these are FCA regulated brokers. We've probably done one or two off the top of my head that weren't FCA regulated, but we knew who the borrowers were directly on those ones. But everything that 98% of those inquiries that come through the door are all pre-vetted by a broker who have packaged and done their own due diligence on the borrower. So that's the first step. It will come into our sales team. The sales team will do their own check, and then they will submit it into credit committee. The first stage of credit committee will do their basic checks. So they will look at the borrower. They will do a very soft search on the borrower. They will do a heavy search on the asset online themselves. And if they think the two work, they will then issue a decision in principle. The decision in principle then goes out to the borrower. If we agree on the terms that were put on the decision in principle, that then comes back into the business, and we go for a valuation. Once the valuation comes in, it's then vetted by an underwriter, and then via a senior underwriter. And if they're happy with it, it then comes back into the credit committee, who then sanction that loan. And if they're happy with it, it then goes into the peer-to-peer credit committee. So there's a big process that we go through, and we can sometimes get a loan out in a matter of 4 or 5 days, but the standard is always the same. We have a tick box exercise that we do, and nothing gets expedited ahead of anything else. Everything goes through that same rigorous process. It goes through the same journey. It goes through the same credit committees before it gets onto the platform. And there's only so much we can really put on the platform, otherwise, it's giving away too much details of every single borrower. And so we've just got to bear that in mind as well. So I think we give enough information for investors to make a decision on deals. I mean, the key thing here is the asset as well. When the assets, you can see the valuation report, and you can see the comments from the valuer who's an independent party involved in the whole transaction. And in terms of looking at the individual as a borrower, there's 3 systems that we use. They online, and that will let us notify or flag anything if there's a fraudulent transaction.
Okay.
And just one other thing before I forget to mention is we'll always have 2 independent solicitors involved in the transaction. So we'll have our own independent solicitor, and the borrower will always have their own independent solicitor. And we always say that they've got to have a minimum of 3 SRAs in the solicitor's firm. Otherwise, we have no desire to deal with those types of solicitors. Yeah,
sounds like you got high standards, which is a good thing, Narinder. Let's see. Question from Norman P. I hope you don't mind taking all these questions. It's putting you on the spot, I know, but a lot of...
No, it's fine. It's fine.
Okay, good.
It's fine.
Norman says, do you see the buy-to-let loans reducing? I know you've talked to me already about how many deals that have been coming across your desk just at the start of 2021. Do you see buy-to-let loans reducing?
I don't think they will. I think they're going to keep on growing. I mean, I think there's a lot of people out there. I mean, I know there's a lot of people that went away from the buy-to-let market, but over the course of the last 12 months, there's a lot of people sitting there with a lot of cash, and I think some are going to be looking to diversify, looking to different markets. But I think there's going to be a lot of people that will come back into the buy-to-let market, and I mean, I think you just got to see, some of the buy-to-let lenders in the market who are coming back into the market, and the LTVs are going up. And if the LTVs are going up and they're dropping the rates, it means there's an opportunity there and they want to get money out. So I think that market will grow.
Okay. John Day says, Narinder, sometimes new deals seem to appear on the website with no prior advisory email. Is this normally what happens? Is an email sent out in advance or not? Or does it tend to go up first and then the email sent out?
No, so the deals do go up on the platform first. They always put on the platform first so we can check to make sure everything looks right, and then that should be followed up with an email. So I know we went through a very short period where we weren't sending those emails out, but that seemed to be sorted because there was different roles that we were aligning with certain individuals within the business. So that's now seemed to be sorted, and there's always an email that goes out when a new deal goes on the platform.
Mm-hmm. Okay. Darren says, congratulations on reaching your £100 million milestone. Hang on, I have some applause. Here we go. Terrible sound effects, but it's the only one I have plugged in. So we gave you a little applause there. Congratulations on that. Rodney Buckland is watching. I don't know where he is. We have people watching from all over the world right now. People in Europe, in the UK, some in the US too. Rodney says, transferring IFISAs between platforms is a slow and error-prone process mediated by the Postal Service. Could Cufflink promote a streamlined IFISA transfer regime using digital technology? What do you think about that? It's kind of archaic, right?
Yeah, it is, and I think we're going to probably be still doing that for months and months on end at the moment. So, if there's a way that we could do it, I'll definitely have a word with the tech team to see if there is a way of doing it. But it is frustrating. It is obviously the number of letters that we get through the door, regarding ISA transfers. So it is a very archaic, like you said, process. But if we can, we'll think of if we can do it. But the problem, the challenge is if we're equipped to take it electronically, wherever the funds coming from need to be, they've got to be on board as well. So I think that's a challenge.
Yeah,
definitely a big challenge.
Yeah, it seems like it would have to be an industry-wide change, and that's probably not going to happen anytime soon. We got another vote here. Michael Shaw says I'd like to see a ISA for self-select. So I've been told it was under consideration. Yeah, we've talked about that, Michael. Hopefully you saw it because these comments are a little bit delayed. It's not something that's super highly requested. Narinder says for self-select for the ISA. Also, Michael says the ISA only pays out yearly. Yes, that's a good point. So what is the thinking behind the ISA paying out once a year on the investment?
That's a good question. I think that's something that I need to take up with the team to see if that's something that we could probably look at again. I can't really say much more on that. There was a decision that we made as a business, but it might be because of the way the tech platform that we built at that time, it works for us on that. So to answer you, I can't really answer that question, unfortunately, at the moment. All I can say is that we'll definitely have a look at to see if we can do that, because I know some people, I mean, I've dealt with a number of investors. The vast majority of people that I've dealt with want to get their money back at maturity. They don't want to get their monthly interest because it will compound away. So that's something that we'll definitely look at. And thank you very much for that. It's brought it to the forefront for me as well.
Yeah, and that'll be another negative that comes off the review too, if you can get that one sorted out, because I thought, that one's not really a good thing. So here's a football-related question. Is Ebbsfleet United headed for the Premiership thanks to Cufflink sponsorship?
I wish. I wish, and it would be very expensive as well to be part of that partnership if they did go to the Premiership. But no, I don't think that's going to happen anytime soon. I've been to see them play a few times, and it's hard work.
All right, R. Brady. Here's a little bit of a gripe for you that I think this one might be easily fixed for you. Why is it that Cufflink have no customer service on the contact page, has no telephone number, no email address, no means to contact them whatsoever? In defense, there is a form that you can fill out, and they also have a live chat on their website. So no, there is not a phone number, but there are definitely ways to contact them. So I think that's pretty self-explanatory. You probably don't have a particularly manned phone at the moment, I would imagine, with a lot of people working from home too.
No, so obviously outside of business hours, the chat service, we do get a number of inquiries that come through there, and obviously there's automated answers that are displayed back on there, but the team definitely do man those between 9 and 5:30 every day, and I've actually done a few responses myself on there myself as well, because I always like to get feedback from investors, and I always like to hear this. This is why I like to come on and wanted to do this as well, because I want to hear the feedback. It's all good saying the nice stuff, and I know there's a lot of nice stuff to say, but I'm always keen to take on the negative side, because that helps the business. And if that's frustrating for you as investors, I want to make sure that we make that whole journey so streamlined and seamless. But I always take on these comments that are negative, because well, not negative. Sorry, let me rephrase that. It's not negative. It's challenging ones that will help the investor and help the business.
Yeah, I always think of them as ways to grow. They're like little water droplets on the seed of Cufflink. If you could fix them, Cufflink becomes a better flower or cactus or palm tree, whatever you want to be. That was a very hippie-ish way of describing it. But Brian says, how robust is your due diligence? We just covered that. Rick's valuations have been poor, to say the least. How do you value a property? I think that's an important one that we should talk about.
So we have a panel of surveyors that we use, and there's one which is it's a big panel which will go out to independents, or then there's bigger ones that are in the region. So depending on where the property is, and we'll always have a local expert that will go into it. So we'll go into the panel. The panel will then identify a surveyor that will go on site who has local expertise. I mean, there's no point in taking a valuation from somebody based in London where the asset's in Birmingham. It makes no commercial sense. You need to have local expertise. So there is a panel where they're purely independent, and the panel itself has a committee that will actually assess that valuation as well. So when that valuation comes into us, like I said, it's previously it's vetted by the underwriter. It's then vetted by the credit committee as well. And if there's questions that are raised, we can go back to the valuer, and we've done it a few times when we go back to the valuer, raised it, and it's gone back into their audit, into their committee as well, who then come back, and it has happened where the valuation has come down slightly, and where we haven't agreed on it, but most of the times they seem to be fine.
Okay, good. We've covered Dave says, congratulations to Narinder on Lisa on the chat. She is very good, so good compliment there. John Pope, why won't Cufflink allow self-select? We've already covered that, so just listen to the stream back if you need to. R. Brady has said, other than the form, I've sent 3 queries 2 weeks via the form about opening an account with them. Have not had a single response. Why is it you don't answer questions from people? I don't know who you are, R. Brady, but if you have issues like that, even drop me an email. I'll make sure that gets sorted for you. And that's not my experience, but with Cufflink, and most other people have not had that lack of customer services. Sometimes things do fall through the cracks. I don't know. You can always send. Do you have like a general email address that people can contact?
So so there's it's hello@cufflink.com. Okay. So if she wants to send that inquiry into there, I know that's always the team are always looking at that. So it's a strange one. It shouldn't be the case where somebody can't get through to us.
Yeah, or send me an email, help@financialthing.com. We will always cover stuff like that. I'll make sure that Narinder gets the email sent forward. So that's always a disappointing thing to hear, isn't it? Where you don't really want to have a lack of customer service, and that's, again, has not generally been the quality of your customer service has been pretty good, very high. So let's see, another vote for splitting the secondary market loan pieces. That's a big challenge to do that, but that could be something looked up in the future. You tend not to have that much stuff too on your secondary market. Every time I've looked, there's always just small
yeah,
piece.
there's one or two pieces. We went through a period. I think it was a record-breaking period during lockdown last year, where I've never seen so many items on the secondary market. But over the course of the months, they were sold on. But yeah, I think genuinely people are kind of happy with their investments. Hence the reason why they don't want to exit out of those. I think there was one that I saw on there earlier today. But other than that, I don't think we see a lot going on our secondary market.
Okay. Tony Walton said, when is the interest paid on IFISAs? Last year it took about 6 weeks. He thought it was very slow.
Yeah, we went through a period last year where the interest was paid slowly, and I do apologise, but I know we are back on track now. Those are always paid on time now, but we went through that little period. That was obviously due to COVID, etc., and that was during that whole challenging period. So we went through that little period and we've got through it. And I know that interest is now being paid on time. So that was rectified. I'm pretty certain that was done around September, October time of last year.
Mm-hmm. Okay. So just a comment somebody's written about, again, this not being able to contact the platform. First of all, this is not an advertisement for the platform. This is something that I do because I'm an investor in Cufflink. I believe in presenting the platforms that I think are good to you guys and to give you the information. And no one else out there is putting the CEO in front of you and giving you the option to ask these questions. So I don't really agree with that. But if somebody wants to make a phone call into Cufflink, is there anybody that they can do that to? Because again, there isn't a phone number on the contact form. So we
do have a telephone. I mean, if you want me to mention, it's 01474 334488. So if people want to ring in on that number, obviously it's out of business hours now, but if they leave a message, that will be picked up first thing by the team tomorrow morning.
Okay, you said it's 01474 334488. That's a great phone number. You're very lucky to go. I'm going to put that in the chat. So whoever you are, Brady, go ahead and call that number and talk to somebody over at Cufflink. I've called them many times, I've never noticed that your phone number wasn't listed, but maybe that's something you could put on the contact page. It would solve all of this.
Yeah. I'll definitely I have a daily stand up with our team every morning, so I'll definitely make sure that I mention that to the team.
Okay. John Morgan, on the opposite side, I've had calls coming from Cufflink to him asking if all is okay and they're happy with the investing. So that's a nice thing to see. And Dave Dawson says he's had good responses in the live chat. So it doesn't sound like this is a normal occurrence. John Pope said I would invest another 50K if I could use self-select inside the ISA. So, it's something that to be considered in the future. There may be people out there that want to do that. Question, do you like Jaffa cakes?
I used to, but I've not had a Jaffa cake for a very long time.
We throw in some questions like that sometimes. People want to know. Let's see if there's anything else, because I don't want to keep you for too long. I know you got to get back to your family. Your son was kind enough to give up his room because your office is downstairs and you wanted it to be quiet. So, and you can see the Old Trafford. Is that like an offensive thing too? If you have a football team locally, what is the name of your team over there? I'm not a football person, so I have no idea.
So the local team we have here is Ebbsfleet United. Okay. They used to play in the National League. They got relegated last year to the National League South.
Hey, are you a supporter?
I am. Since we've done the sponsorship deal with Ebbsfleet, I've become a supporter of the team, and I went to go see many matches. But I'm a diehard Man United fan, as is my son. Hence the reason with the Man United. I mean, if I turn the screen around, there's a whole lot of Man United stuff on this side. Yeah.
Okay, no problem. John Day said, is today's Sporum Lane Tier 3 loan well above your average in value? Seems a bit of a beast compared to the others I've looked at.
So this is the new one that went on the platform.
Yeah, is it 5 million? Is that right? Is that what he's saying? 5M?
So I think that's the Yeah, I think that is one of our biggest loans we have put on the platform. It's a borrower that we know very well. It's a site we know very well. We've been onto the site ourselves as well. We've seen the valuation, and we're comfortable doing that deal. Hence the reason why it's tiered up. So, we've done 4 different tiers into that loan. And if people want to invest, and I know people are very conservative, tier 1 I think is 15-16% loan to value. So, it's down to each individual, and
Okay.
that's why we've tiered it that way.
Okay. Dave has asked, is Cufflink profitable? We already covered that earlier, so hopefully you heard that. Paul says he checked the live chat. Lisa said she'll be back at 9 a.m. tomorrow. You can't make Lisa work 24 hours. It's just not. Right. Peter Clark, what's the minimum for auto invest?
Minimum for auto invest is £100.
£100? Okay, there you go.
It's a minimum investment on both Select Invest and Auto Invest is both £100.
Norman P says, well done, Narinder, for stepping up and answering these tricky questions. So there you go.
I don't mind this, Lawrence. Like I said to you before, I mean, I like to get feedback from my investors.
Yes, that's okay. John said, it's the Southwark Road loan spooked me, but hearing from you has put me at ease. So there you go. And yes, I have visited their offices several times. They've given me the tour. We've done some videos. Actually, if you look at the channel, I have an interview that I did with you that I completely forgot to post. It was very bad. It was from when I came in the last time, I think in the winter of 2019. I should probably put that up, but I don't want to if the information may be a bit out of date. But it's actually where I came into your office and we had a video chat.
Is it the one that you randomly just turned up?
I didn't. I've never just randomly turned up, I was knocking on the window. No, I try not to randomly turn up. Maybe that's a good idea. You catch people off guard, right? And that way people will know these are legitimate visits and not all set up advertising visits. Scott Peacock says, how can I see a summary of my loans? Your loans just on the portfolio page.
Yeah, it should be on the portfolio, yeah.
Okay.
If you have a challenge, just send us an email in and we'll get Lisa or one of the other team to contact him.
Okay. Dale says, any plans to offer monthly interest on the Auto Invest product? We've already talked about that.
We talked about that's something that I will definitely take up with the team and see if that is. But like I said, any changes of that size, I mean, from an outsider, it looks as if it's a simple change, but you know it yourself, Lawrence, when it comes to making changes like that to any system, it's a big process.
Yeah, absolutely. And look, everybody that's out there watching, there's obviously competition companies, and everyone has their pros and cons. No company is going to be perfect. You have to keep that in mind. I'm sure Narinder tries to make Cufflink as good as it can be, but it's never going to be perfect, and there is no perfect investment out there. So David Lightly says, do Cufflink publish the total interest rate charged to the borrower? If I'm getting 7%, but you are charging 15%, does that suggest a more risky proposition? What's your take on that?
Sorry, could you say that question again?
Yeah. Do Cufflink publish the total interest rate charged to the borrower? If I'm getting 7%, but you are charging 15% to the borrower, that suggests a more risky proposition. And this is something you and I have talked about before. What's your reasoning for not publishing? Actually, and tell me if I'm wrong, but didn't the FCA say mandate that had to be published now?
It's on the terms and conditions. So when you enter into the loan, if you on that terms and condition, it shows what the interest rate is charged to the borrower. It gives you all those details on there.
Okay, so you just got to go into the terms and conditions. Okay, There you go. Simple. Let's see. Paddy is here. I think he's in Ireland. Rodney said, how is Obsolete United doing under? We've already talked about this. Seems to be. I think Rodney's right down the street from you. He's an Obsolete fan.
I know. I've met with Rodney before.
Oh, have you? You know Rodney? Oh,
yeah,
okay.
I know Rodney.
Good. Let's see. David Lightly says, aren't the FCA on your back for late accounts?
So look, we have been communicating to the FCA. The auditors have notified the FCA as well, so we're aware of it. Like I said, it's the 2019 accounts are due to be out. It's a matter of days, if not a week or two. They'll be done. So the FCA it has been notified.
Okay. Stephen Hale, hi Narinder. With large loans, for example, £5 million, Borum Lane, what happens if not all the tranches are filled by the investors? How would you fill the loan?
We fill it from our pockets, so we'll fund those deals ourselves. So the way we work on the platform is, so a deal will go in on reserve first, so investors will come in and invest as much money as they can. So the closer we get to the actual completion date of the loan, if there's say £50,000 or 100 or £1 million or £2 million, that's something that we'll have to top up ourselves and complete that transaction. But then that loan is left available for other investors to come in to fill that pot up as that deal is live. So yeah, that's down to us. It's a challenge sometimes, but we've never said no to a deal that's gone on the platform, and we've always managed to fill it either through our investors and our own money as well on that deal.
So you've got a pretty big pool of available money if those things need to be filled. Okay, that's good. Chris Hayes says reserve deals that have been cancelled, no cashback reserve and money tied up in the interim. Should there be an application fee made by the borrower to pay investors in the case of a cancellation?
Yeah, so I know we've had a challenge with that, and I'm sure Chris has probably had a few investments probably in some recent deals that we've had to pull off the platform, which is frustrating for us because we've gone through that whole process of getting that deal vetted at solicitors on the platform. I mean, just please note, no deal goes onto our platform unless we've got an undertaking of the fee through our solicitor. So we don't earn anything if that deal comes off. Yes, we could charge a application fee to a borrower, but we're part of the Association of Short-Term Lenders, and the terms and conditions there is we don't really you shouldn't be charging upfront fees to borrowers because it's just not TCF. Mm-hmm. So we're part of that association, and for us to be that part of that association, we can't be seen as charging upfront fees. So we pride ourselves as we do with those other lenders that are part of that association as well. So yeah, to answer your question, no, we don't charge any fees upfront. We won't charge any fees to these borrowers upfront. It hasn't happened on a regular occasion, but on the odd occasion it does happen, and it just happens to be that in last week, I think the week before, we've had to pull off 2 to 3 different loans, which is frustrating for us. But immediately, there's loans being available, for you to diversify and put your money across those other deals straight away.
Okay. Lots of comments about Lisa's good support, so you can give her a pat on the back next time you...
I'll definitely feed that back to her tomorrow morning.
Give her an ice cream. Obviously, the chat is not going to be 24 hours a day, people, so, sensibly, business hours, there's not going to be anybody manning the chat at 1 a.m. in the morning. It's not reasonable. Paul Bagworth, has anybody tried the phone number? I have before in the past, so I bet if you call it now, you're probably not going to get a hold of anybody, but during normal business hours. Dave said, yeah, contact page is a little poor. Yes, so that's something you guys could improve upon. You've gotten all the good feedback from everybody regarding this difficult contact page experience.
Yeah.
But hey, it's not the first time that a company has not made their contact pages, because it could be. I had it myself. I don't have a phone number on Financial Thing. If you want to contact me, you got to send an email and I'll answer you eventually. But I'm sure you guys can sort that out. Dave says he has a little issue with one IT problem. When I top up, I have to sign out and back in before I can invest the money for some reason. So just a little bit of feedback. I don't know if that's something that's just a Dave Dawson problem, or so when he tops up, he can't invest. He has to sign out and sign back in for the money to show up. Let's see if there's any. We're going to be wrapping this up in a few minutes, so if you have any other more questions you want, just pop them in there. What is Cufflink's minimum profit target? And do you lend to inexperienced investors perhaps doing a project for the first time?
So we have lent to first-time developers. Mm-hmm. But if we're going to do that, we would do and want to see the business plan. We want to see the costs associated with the development. And like I said, we've got Pete, who's on our team, who's fantastic. He will go down to the last penny, and he will. And it's happened on a number of occasions where he says, "There's just not enough margin in this deal. I don't know how they're going to do it, or they haven't calculated their costs right, because the costs are so much higher and greater." So we'll go through them. If the costs justify it, then we'll definitely have a look at it, because some people, if it's a first time, say, development deal, it's not going to be one that's going to be £1 million, £2 million, £3 million deal. That might be a £200,000-300,000 development deal, which we can take on. We don't see that as high risk as taking on somebody on a first time development on a million, £1.5 million.
Okay, so the other part of that question is, what is Cufflink's minimum profit target? I'm not sure how one would answer that, but do you have a minimum profit target?
So look, we have a minimum fee that we want to earn on deals for us to be profitable on that deals. But like I said, we're not a profit-making business at this moment in time. We're on that curve. So hopefully sooner enough, over the course of the next 8 to 12 months, that will bear fruit.
Okay. This is a good question. Philip Walters says, how do you check if properties are ready at the end of a deal to be refinanced, as a reasonable number of your loans are repaid in this way?
So we're constantly in contact with our borrowers throughout the term of the loan. So if there's a refinance, so the team there, Jackie and Natalie, are definitely working very closely with the borrowers to see what stage they're at with the refinance. And particularly the last 30 days of every loan, we would want to see terms and conditions from another lender. If we don't see that, then we're working on different strategies to exit out of that loan or to reterm. And if we're looking to reterm, then there may be a capital reduction coming from certain borrowers. So look, we are definitely in contact. In an ideal scenario, if there's a 12-month deal, the deal only runs for 12 months. But it does happen where the deal goes over, and in some occasions the deal pays back early. So we've had frustrations from borrowers where the loan's gone over, and we've had frustrations from borrowers because the loan's paid back early. So it's that's part and parcel of this industry. And we've worked in the bridging industry, and the bridging industry works exactly the same. Sometimes people pay back early, sometimes the loan goes over and it ends up going into recovery. But that's, like I said, that's part and parcel of the industry.
Yeah, understood. mgrob65, how much money is lent out by Cufflink, and how has this increased? I think we talked about that. 5%, is that correct?
Yeah,
so you tend to put in 5%, but if you need to put in more to fill a loan, you'll do that.
Yeah. So like I said, we have our own means through our personal investors, high net worth individuals that we have, and our own funds that we'll put on as well.
Okay. If Absolute United drew Manchester in the FA Cup, who do you support?
That's a good question. I'd probably be Man United, because I've been a lifelong Man United fan.
You can't do that if you're sponsoring the other team.
I'm sorry, man. I'm sorry. I love to go for Man United all day long. I've been supporting Man United since I was 13 years old. So yeah.
But hopefully the Absolute executives are not watching this. mgrob said, what are the loan to values on loans usually? I would imagine, do you have an average target that you try to hit on those?
Yeah, so the book, if I remember correctly, we're around the 60-65% mark. So, which I think is reasonable. I know our Auto Invest pool is probably running, it is running sub 60% loan to value. So, we're around 60-65% is where we feel comfortable. As a worst case. But I think, if it creeps up closer to 70%, then we need to start looking at certain deals. Especially if there's bigger deals that need to repay back as well. So yeah, about 60-65% is where the target is.
Okay. Richard says, Narinder, do you invest in other peer-to-peer companies yourself? If so, which ones? Are you spying on anybody? No.
Well, me personally?
Yeah.
No, I don't. I mean, we're too busy doing what we're doing at Cufflink, and I wish everybody else success as well. And we want other platforms to do well, because the more they do well, it looks better for us as well as a business as well. We don't want to see more casualties, but like I said, it's inevitable. You will see casualties, but we want everybody to succeed as a business.
Okay. Dale Potter, feature request. Could you add a filter to the list of select invest loans so I can only see loans that I can invest in with the amount of left in my wallet. So
yeah, we have had that requested previously as well.
Okay. Yeah, another one for the useful interview. How many people work for Cufflink? Are they all based in the UK? Thanks.
So at present, we have about 24, 25. All the employed people are based in the UK. We have consultants that work abroad. They're mainly tech people. They're dotted around India and Croatia.
Yeah, I don't blame you for that too. It's a lot more cost effective nowadays, unfortunately. But David said, well done, Narinder, for answering the questions. They're very grateful. A lot of people on the stream super happy about you being here.
Thank you.
David says, David Dawson, what size loan book do you need for the company to be profitable? Is that the way it works? You have to hit a certain loan book amount?
So there's a certain target that you want to get to. Look, like I said, we're trying to get to the £100 million loan book mark as quickly as we possibly can, and I think that will take a few. I think that at some point this year that's achievable as a business, but it depends on how things pan out, for the industry, and us coming out of lockdown as well, and more borrowers going out to borrow more money and invest in projects for themselves. So, yeah, it's a challenging year ahead. I think it's going to be a little bit more challenging than it was last year because the lockdown seems as if it's going to go on longer where we are at the moment. So, yeah, fingers crossed.
Yeah, absolutely. Let's see. Is there anything else? I know you fielded a ton of questions, and thank you for doing that. I pretty much had asked you everything that I wanted to ask. Was there anything else that you wanted to tell the people out there? We still have 65 people watching live. Anything you want to tell them about things that are happening at Cufflink, why they might want to consider you for a place to put their money?
Yeah, so look, for us, it's still business as usual. So, the platform's very much open for taking on investments and taking on new investors to our platform as well. We pride ourselves on our service, and I'm glad to hear that there's a lot of people that are very happy with our service, and particularly with Lisa, who's managing our investor relations inquiries as well. But look, we can't always get everything right on time, on the platform. No one's perfect, but wherever investors want to give us feedback, please do give it back to us at hello@cufflink.com, or ring in and speak to our customer services team, who are happy to answer any inquiries. For us as a business, look, we want to grow our loan book. We want to do more diverse types of loans. So we don't want to just do pure development. We want to do your bridging type loans, heavy refurb type loans as well. So and we want to grow our IFISA book as well. So for us, it's business as usual. The key thing for us is our standards have never dropped and never will drop when it comes to vetting borrowers and deals before they come on the platform. And we've gone through a challenging period last year, and I've seen month-on-month growth from October, November, and December of last year, and even January so far has been fantastic. And I just want to say thank you to all of our investors who have supported us through that journey. And there's some bigger and better things that are going to come from us going forward as well, and we're here for the long haul.
Okay, well, that is going to do it. You heard it here first. Narinder Khattoare, did I say that right? Your last name, Khattoare?
That's absolutely, yeah.
Wow, that's a good last name. Thank you so much, everybody. Check out, if you want to invest in Cufflink, you want to try them out, I put my link in there. Join through that if you could. It supports me and supports Cufflink themselves as a business that we want to see thrive and survive during these difficult times. But I'm super happy with what's going on with you guys. Thank you. And will you come back on in the future?
Yeah, absolutely. And like I said, apologies for me not coming on pre-Christmas, and happy birthday for tomorrow, by the way.
How did you remember that?
I'll never forget anything.
Wow, that was it. Yes, 40. I'm turning 21 years old, 21 years young tomorrow, going out for a couple of beers. But yes, thank you. So that's it. We're going to wrap it up. We'll be back next Thursday. General stream next Thursday. We're not doing a guest. I think we're going to do one guest a month at the max, but probably not even as many as that. So we do have a couple of interesting guests coming up in the next few months. But really enjoyed it. Thanks again, Narinder. Be safe
Thank you,
out there
Lawrence.
in lockdown, and
You too.
wish you the best. Okay.
Thank
All
you.
right. Take
Cheers.
care. Bye.
Cheers, guys.
Bye.